Alright, welcome back to the Gex Pro Weekends Market View. Look, the tape was it was heavy all session today. Liquidity was thin, really thin, and honestly, risk was just hiding in plain sight the whole time. Metals blew out, crypto absolutely puked, but then you look at equities and they barely flinched, right? And to me, that tells you everything you need to know. The tape is lying, and it feels like someone's sitting on a massive order they don't want us to see just yet. Now, I've had a few people asking why gold and silver just fell off a cliff today. Honestly, it was a classic everyone on one side of the boat situation. Metals have been so parabolic lately, so levered. Everyone loved them. But when the dollar refused to die today, even though it wasn't a huge breakout, it was enough to spook the levered players. You look at that print on silver. That was a historic liquidation. It wasn't a macro panic about the economy. It was just positioning getting absolutely shot. One big player hits the exit button, the stops get triggered, and suddenly it's a forced wash. No discretion, just selling because they had to. And while all that's happening, you've got energy acting like the only adult in the room. Oil held its ground while everything else was basically unraveling, and that's where the real money is sitting right now. Financials are lagging a bit, regionals are soft. We're not seeing a waterfall yet, but the bid is getting really, selective. And tech. Tech is actually still holding up. NVIDIA held, the semis didn't crack. And look, if this were a real systemic crisis, those wouldn't be standing. Simple as that. Anyway, the lead indicators. Well, bonds aren't screaming. Credit is actually pretty calm. High yield didn't lose the floor, and that's what I'm watching. You just don't get a real crisis without credit blinking first, right? Yields were chopping around. The curve was noisy, sure, but no real disorder. So, don't overreact to the headlines just yet. The price action isn't confirming the fear. On the institutional side, the S&P 500 stayed right in its range. No forced selling there. Silver actually tagged a major demand zone. It was textbook, really. Same for gold, it gave back the froth, but kept the structure. Bitcoin flushed into known liquidity and bounced exactly where it should have. Yeah, it's looking a bit uglier, still searching for a bottom. But look at the print. Someone is defending size, they're just not in a hurry to chase it. So, the big takeaway today is this cross-asset divergence. Metals down, dollar firm, equities steady. That's not the end. That's a reset. If you think this is a full macro unwind, well, I think the tape is lying to you. This is a positioning wash, plain and simple. Before I go, just 3 things to keep on your radar. 1. Silver and gold. Watch if they actually build value here or if this is just a dead cat bounce. 2. Credit spreads. If those widen, that's your real warning shot. And 3. Keep your eyes on NVIDIA and the semis. If we lose those, well, then we've got a totally different conversation on our hands. Alright, that's it for me today. Catch you guys tomorrow.